The long-awaited and highly anticipated Ethereum merge is now expected to finally take place on September 15th, transitioning Ethereum from an energy-intensive proof-of-work consensus algorithm to one that uses proof-of-stake. Now, Ethereum has been rallying on news of the upcoming merge, and Bitcoin has also been steadily gaining ground, up around 36% in the last 2 months. So, is the crypto winter starting to thaw? Have we seen the bottom for Bitcoin? And are we really on the verge of one of the most important events in blockchain history? Well, we have a power panel to break this down and more. And I'm pleased to welcome to the show Steven Sidley. Steven is an award-winning author. His books include Beyond Bitcoin, Decentralized Finance and the End of Banks. Steven is also a professor of practice and head of the Blockchain and CryptoVerse Research Group at the University of Johannesburg in South Africa. And Steven is also the director of Bridge Capital Future Advisory. Joining us now from South Africa, and it is a power panel, Steve, but you're joining us with a bit of a power blackout situation on your end.
Exactly. If you live in a place like South Africa, occasionally you have to deal with power downs, and you will see me light up suddenly in about 15 minutes when the power comes back. But dark lighting is probably beneficial to people who not. Yeah,
well, that may be the situation in Johannesburg, but not in Cape Town, where Ran Neuner is joining us back by popular demand. Ran, of course, is the founder and host of Crypto Banter. He's the co-founder and CEO of On-Chain Capital. And in 2017, Ran launched Crypto Trader on CNBC, the first crypto-focused television show. Ran, it's so good to have you back with us on this all South African panel here.
So good to be here and so good to have light. I guess we should be we should be thankful for light and electricity.
All right. Well, seeing as you're in the light, Ran, we'll start with you. And I want to get your broad outlook on the markets here. Are you ready to call a bottom?
Yes, indeed. I think we've hit the crypto bottom. And I know making bold predictions like that is kind of risky, but I have got some great rationale and some great data to back it up. I think if you look at where crypto came from in the last couple of months, crypto suffered one of the biggest liquidations we've ever seen. We had the Lunar ecosystem collapse, which is a $100 billion ecosystem, which caused a cascade of liquidations throughout the market. First, we saw the ecosystem itself liquidate, and that was about $100 billion. Then we saw all the lending and borrowing protocols who were actually exposed to the protocol start to liquidate. And then we saw the funds who were exposed to the lending protocols start to liquidate. And we had what I think can be called a black swan event in crypto. It was a mass liquidation event, the likes of which we've never seen before. The sheer number of retail investors that were liquidated and the sheer number of institutional investors that were liquidated can only liken this to a black swan event. Now, I want to just show you something on the chart. So I've been tracking this chart quite closely. This is the Bitcoin weekly chart. And what I've done is I've taken the weekly chart since the beginning of time for Bitcoin. And what you can see is what I've done then is I've taken the 200-week moving average here. Now, the reason why I've used the 200-week moving average is it's the longest measure that we've got of Bitcoin's upward trend. And if you look at this, obviously the chart starts 200 weeks or later in Bitcoin's life. But you can see that Bitcoin hardly ever touches the 200-week moving average. And very, very, very rarely, in fact, once in 2015, once over COVID, and again now has Bitcoin broken under the 200-week moving average and broken that trend. Now, the interesting thing is that every time it's done that, it's rebounded and given investors huge returns. But the other interesting thing is that the times that it's gone under the 200-week moving average have been black swan events. So here's the first one. This is COVID. I think we can all agree that was a black swan event. Bitcoin broke below the 200-week moving average. It was a black swan event. It wasn't exactly in the trend for Bitcoin, and Bitcoin immediately recovered and went up. Now, again, this time after all the mass liquidations, and remember one thing, Lunar had about $3 billion worth of Bitcoin that they liquidated in the market to try and defend the peg of the stablecoin. And they sold that down in the market, and that started causing all these liquidations over here. And we broke below the 200-week moving average for about 5 weeks. And now we're back above the 200-week moving average. And so when I look at all that data, and I put all that data together, I look at the fundamental data, the mass liquidations that we've seen in the industry, and then I take that and I overlay it over the technical data, I've got to say to myself that that was a real black swan anomalous event, and that now we're starting to get back to normality or to equilibrium. With that said, though, we are at the mercy of the macro environment. And for as long as the macro environment continues to perform, I think we'll be okay. So now let's quickly just shift our attention to where the macro environment is. We've seen a drop in inflation for the first time. We saw quite a significant drop in inflation. We saw 0.5%. The Fed is not meeting again until the end of September. Before they meet again in the end of September, we're going to get the September inflation data. If you look at all the inputs for the September inflation data, specifically, you look at the commodities, you look at the oils, you notice that those have all come down. So you can kind of assume that by the time the Fed meet again at the end of September, we will have a maybe lower inflation reading, probably somewhere between 8 and 8.5% inflation reading. And so right now, if you look at the probabilities are about 50-50, whether the Fed will increase by 50 basis points or 75 basis points. And I think that the market has already priced those rate increases in. So I think in terms of whether we're at the bottom or not, I think I'm confident to say that we've probably hit a bottom in crypto unless another black swan event happens. But how long we're going to be hovering between where we're at and, kind of near the bottom, how long winter's going to last, I'm not sure. But I think we've had the coldest days of winter.
All right. So still need to thaw out, but the worst of it is over. Steve, do you agree?
Yeah, I agree with most of that. I have a couple of caveats. I mean, I'm trying to separate what my heart says, which is that winter is over, and what my head says, which is caution, caution, caution. So I just want to talk about the macro environment a little bit. The perfect storm or series of black swan events that hit Bitcoin are quite well known. I mean, if you had to bundle into a single pot the pandemic, the invasion of Ukraine by Russia, the supply chain problems, the printing of the US dollars, the resulting inflation, and then the Terra Luna collapse, which caused the Celsius collapse, which caused the three anchor collapse. And there was just this clackety, 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 clackety domino fall of prices. That is at an end, all of it. But there is a couple of things still staring us in the face. Great amount of danger. China decides to invade Taiwan is another possible black swan event. Russia decides to step up its aggression all the way up to and perhaps including nuclear weapons as another black swan event. There is the black swan event that I hope we're going to be talking about later, which is what happened with the Office of Foreign Assets Control with the sanctioning of Tornado, which is possibly the beginning of the biggest nuclear bomb in crypto in history. And perhaps we can talk about that later.
We will.
But in most respects, I am agreeing with Ran that we are at the end of this. We are unfortunately tied to NASDAQ and the NYSE and the major assets, which we didn't used to be. So we have to look for those to recover in order to pull Bitcoin up with them. And perhaps at some point, Bitcoin starts to disengage with those traditional assets and find its own life.
All right. So barring some black swan events, which if we've learned anything over the past 3 years is that expect the unexpected. So many things happen that we would say, that's never going to happen, actually happen. So we can't be too careful to dismiss those potential black swan events that you mentioned, Steve, like China taking military action against Taiwan and moving this into a kinetic war potentially with the US. And like you mentioned, we could see further escalation in the Russia-Ukraine conflict. But barring those black swans, it does seem as though consensus is that we have hit a bottom here and are probably going to be staying in this price range. Mike Novogratz, founder of Galaxy Digital and billionaire cryptocurrency investor, he expects Bitcoin to remain range bound for a while at around the 30,000 mark, not passing that anytime soon. What's surprising, though, and I want to get your thoughts on this, is that we did see a big development with regards to institutional money coming into the space, and that didn't really seem to spark a rally. BlackRock, the world's largest asset manager, partnering with major crypto exchange Coinbase to provide institutional clients access to Bitcoin. Now, you would think that that kind of news, recognition that crypto is a legitimate asset class for institutional investors, would have sparked a bigger vote of confidence rally. Ron, are you surprised that we didn't see more given that news?
You know, you've said two things in what you just said that I'm gonna say. The first thing is I've learned that you shouldn't listen to Mike Novogratz on CNBC because every time he's been wrong. The second thing that I want to say is that in a bear market, the market doesn't respond to good news. And we know very much that we're currently in a bear market, and the market doesn't respond to good news. It's not responding to good news. We thought that the BlackRock news would move the market, and it didn't. It didn't at all. But I do think that it is the biggest news of the year, because if you read the announcements, they made two announcements in the span of a week. The first announcement was that they partnered up with Coinbase, and the partnership wasn't that BlackRock was going to start buying Bitcoin. What they said is that they were going to make it available on their Aladdin system. And the Aladdin system is a system that goes across investment houses in the United States and allows them to make investments let's just say at the touch of a button. And that now makes access to not only BlackRock, but their entire base to be able to buy and store crypto in a very safe way with Coinbase. The second thing that they announced was that they're starting a Bitcoin trust, which gives exposure to their clients specifically around Bitcoin. And I think that what we'll see now is when the sentiment turns and people start to buy Bitcoin again, the buying power is going to be much bigger. And I think this is probably a good time to talk about some of the achievements that we haven't yet celebrated on Bitcoin. So BlackRock is one of them. The market didn't celebrate that. The two announcements. The second announcement actually comes from another chart. And sorry, I'm very much a data person, so I like to look at the charts.
Share the data. Share the chart, Ron.
Here's the chart, and the chart is that a day ago we hit 1 billion active addresses on Bitcoin, which doesn't mean that we have 1 billion people using Bitcoin, but it does mean that there are 1 billion addresses, which is, I mean, it shows, if you look at this chart, it shows that the growth of usage of Bitcoin is exponential. Now, I want to show you one more chart here, which also makes for interesting viewing, and that is addresses. Let me just quickly get the right chart here. This is addresses of people that hold a very small amount of Bitcoin. So 0.1 Bitcoin, right now $2,390 worth of Bitcoin. Now, what you can see in this chart is that, first of all, the chart is growing exponentially. But you're seeing two very interesting things. The last time the chart deviated from the trend was in 2017 and 2018, when retail got into crypto because they thought they were going to make a fortune. The market then collapsed and retail got flushed out, and we still carried on growing exponentially. Now, the exponential is very encouraging because it shows that the adoption of this technology is happening exponentially. But now we're seeing another phenomenon, which is a very interesting phenomenon. We're seeing the price going down, but we're seeing people with less than 0.1 Bitcoin increase at a much faster rate, which shows you that what we're going through now is we're going through hyper adoption. So it's not people who are buying this because they want to get rich quick, which is what happened in 2017 and 2018. It's people who are actually hyper adopting Bitcoin for what it's meant to do. And I think that's another thing that we haven't celebrated. 1 billion Bitcoin addresses. At this rate, we'll probably get to 1 billion users by 2024, 2025. And that makes us, huge. So yes, I know we're focusing on a very short time frame between now and September, but we should probably celebrate the bigger metrics first. And that is that we've hit 1 billion addresses, and we're on track for probably 1 billion people using this technology in the next 2 to 3 years.
Those are certainly very big milestones. Focusing on the BlackRock one, it was a huge turnaround for Larry Fink, considering he called Bitcoin an index of money laundering back in 2017. So if the world's biggest asset investor is now signaling that Bitcoin is a legitimate asset, that should have major ramifications. Steve, I'd like to get your thoughts on how significant that is. And please feel free to comment on the adoption rates that Ron was pointing out for us.
Now, Rand's charts over there is just, bravo, hallelujah. Those charts that's exactly what's happening. The adoption rate and the number that Rand mentioned, which is 1 billion unique users of Bitcoin by 2025. I've seen in a number of different research papers, this chart of adoption points very solidly towards that. The BlackRock announcement was very profound. This is $10 trillion in assets that they manage. A very small percentage of that moves the price of Bitcoin a lot. What is holding it back, in my view, is first of all, the rest of the institutional world are saying BlackRock did what? And they're trying to digest this. And of course, what's going to happen is a lot of them are going to follow suit. But secondly, there is a regulatory pushback, which everybody knows about. In fact, I think just today, one of the US regulatory agencies said, okay, we're going to start licensing banks to take crypto deposits. They haven't done it yet. They announced that they would be doing it. It's going to start in Wyoming, where they have the speedy banks. And that is going to cause a rush of interest, because where BlackRock may say we're going to give our clients exposure on this, everybody's now looking to the other side, which is the regulators who are trying to control and slow this thing down, and saying, do you have a response? Do you have a response? Do you have a response? If there is no negative response from the regulators to this sort of thing, and it seems that regulation in most cases is opening up, we are going to see first a gradual increase of prices, and then a very fast increase of prices. So for everything that Ran has indicated, I strongly support. I don't see any holes in that argument whatsoever.
All right, then I'm going to stick with you, Steve, and put you on the spot if you support those arguments and you're in the same boat. Do you have a price outlook for where you see Bitcoin, let's say, September of 2023?
First of all, what I do have is electricity, so I'm quite pleased about that.
Oh, well, you're back with power. That is a fantastic development. You know, it's the light. As I'm about to ask you where you see Bitcoin going, the war room lights up. Maybe it's a sign there.
No, that's a sign. Okay, so where do I see Bitcoin going? As we all know, and I think that Ran, who's been deep into this for a long time, would agree with me that Bitcoin predictions and a fool are soon parted. But let me play this out for you anyway. Bitcoin is the hardest money system ever built. Bitcoin in the long term is only going up. I have absolutely no doubt about that. If you want to put me on the spot and embarrass me so that you can reveal what
or prove that you were correct.
Yeah, I'll prove that I was correct. I will give you a number, if only in order to show you that predictions don't make much sense. I'm going to tell you that Bitcoin is going to be above 50,000 by the end of 2023, and I think that's very conservative. And I think that Ethereum is going to be above 5,000 by the end of 2023. On the condition that the merge is entirely successful, which I have 100% confidence in.
All right, well, we're going to touch on the Ethereum merge, but it's interesting you don't see Bitcoin making a new high in a year's time then.
No, I think there's still quite a lot of caution. I think that caution remains for a while. I think that the highs of whatever it was, 69,000, that happened some 6 months ago, I think that was irrational exuberance from retailers. I think the institutions will take a much more cautious approach. I think the price will grow more maturely and more linearly rather than exponentially in the next 18 months.
Ran, do you agree with that?
I think Steve's being very conservative, to be honest. But I'm not going to make a price prediction. But suffice to say, I think that Steve's being very conservative in his approach, and I think he's trying to protect himself. I think one thing that we need to pay attention to, you asked why the Bitcoin price is not moving. And I think that there's an elephant in the room that no one's talking about, and that is the 140,000 Bitcoin, which are part of the Mt. Gox hack. And I mean, just to give the viewers a little bit of a background, there was an exchange very early on in Bitcoin's life that got hacked, and they managed to recover a certain amount of Bitcoin. And today there are 140,000 Bitcoin in an account, which are going to be distributed starting from this week, actually, mid-August sometime. The liquidator, the estate, the trustee, has given an indication that they're going to start releasing the Bitcoin back to the people with the claims against the trust. Now, that's an overhang of about 140,000 Bitcoin. So with 130,000 Bitcoin, take that at today's prices, that's $5 billion worth of Bitcoin that needs to come into the market somewhere around there. So, I mean, that's one of the things that's keeping this market down. So if you look at what's at play in this market at the moment, there's two forces at play here. You've got an upward trajectory, three forces at play. You've got an upward trajectory because markets are recovering and Bitcoin and crypto was oversold after the liquidations. Then specifically on Ethereum, you've got the merge, which is like a rocket ship underneath Ethereum powering it up. So Ethereum was down at $980 and now is trading at 100% higher than that, $1,900. And then you've got Bitcoin trying to rally, but it's got like this thing pushing it down, which is, hey guys, there's 140,000 Mt. Gox coins, which may hit the market. And that's kind of this dynamic that's happening at the moment. So we're in a recovery. Ethereum's got a rocket engine underneath it, and Bitcoin's got a cloud on top of it being pushed down. And that's where the market is today.